Good afternoon, everybody. Thank you for joining us. Apologies, we're starting just a few minutes late. Today we have Dan Barnholden, CEO, and Chris Richings, VP Technical from Luca Mining joining us. This is the company's first webinar with us. The format of today's session will be a brief presentation followed by Q&A. So if you have questions, please put them into the comments box at the side of your screen. And before we get started, as always, today's presentation will contain forward-looking statements. If you'd like to learn more about those, you can find them in the presentation on the company's website. And with that out of the way, over to you, Dan and Chris. Welcome.
Thanks very much, Magna. Appreciate the opportunity to present to this group. We are going to review the latest and greatest presentation on Luca Mining. I just joined the company after a 20-year career in investment banking. I've moved into management of a company. This is the first time doing this, and what I saw with Luca was an extraordinary opportunity to bring a company that is under-owned in the market, not known. It has no research coverage by any investment bank, and we're just about to turn a corner at two meaningful producing assets in Mexico. And we have an opportunity to double our production from today to 2025. So we are really in the process of unveiling Luca to the broader market. Really appreciate the opportunity that Adelaide has given us, and we will jump right in with the slideshow. What you see here on the first page is really the three pillars of value that I see at Luca. As mentioned, we are in the process of ramping up at two mines. You've caught me here today at Tahuehueto, which is our brand new mine in northwest Durango State. Just announced 2 weeks ago that we had completed construction, and we are currently in the ramp-up phase. Our other asset is called Campo Morado in Guerrero State. It's about a 6-hour drive south of Mexico City. We announced last week that we had hired mining contractors to help us to get from the current 1,400 to 1,600 tons per day to full production at 2,200 to 2,400 tons per day. And we expect to be in a position to do that with the help of our mining contractors by 2025. The optimization is expected to generate meaningful cash flow, which we will then in turn use for exploration. We announced 2 weeks ago that we are undertaking the first meaningful exploration program at each asset in more than a decade. And some of the exploration potential is really quite extraordinary at both assets. Assuming that our exploration bears fruit, we would then expect to consider meaningful expansion, and we see a path, an organic path for these assets to get from the current 70,000 ounces of production that we expect to produce in 2024. We see a path whereby we can bring these assets to 200,000 ounces of current production. All of that for less than $100 million market cap Canadian. We see meaningful opportunity for capital appreciation from these assets as we're able to optimize, explore, and expand. So what we have right now in the portfolio, we've got 70,000 ounces of gold equivalent production expected from our two primary assets in 2024. As mentioned, I see a path for up to 2,000 gold equivalent ounces of production just from these assets. Our expected production costs, all-in sustaining costs, will be around $1,500 this year. The assets are de-risked, and what I mean by de-risked is I see two primary risks associated with emerging mining companies: permitting and capital. About 99% of the capital is behind us, and we have every permit required to be in full operations and to explore these assets. We have $500 million in infrastructure. The prior owners of these assets invested $400 million in Campo Morado. and 100 million at Tahuehueto. We have a total mineral inventory of 2.7 million ounces. In reality, that might be a little bit overstated because our resource estimates are a little bit older. However, we are currently kicking off exploration and see an opportunity to grow these materially. As mentioned, we have resource and throughput upside, and we're in the ramp up phase here right now at both mines. So we consider ourselves to be truly a polymetallic producer. We have about half and half gold and silver. So we think about it as about 40% gold, 15% silver, almost 20% copper, and these will move around on any given day, given metals prices, and then about 25% zinc. We think that this combination of metals production actually is a built-in hedge for us, because often when copper is going down, gold is going up, and when gold is going down, copper and zinc tend to be going up. You can see where our assets are here in Mexico. As mentioned, our primary asset, Campo Morado, is about a 6-hour drive due south from Mexico City. Paved highway access for about 90% of that, and about an hour up a semi-paved road. What I mean by semi-paved is it's paved in the steep parts and it's gravel in the flat parts. Tahuehueto, where I am today, we arrived via small plane. It's in northwest Durango State. We flew in this morning from Sinaloa, where we overnighted. We'll jump right in here now to the assets. As mentioned, we plan to do 60 to 70,000 ounces of gold equivalent production, about 3/4 of that from Campo Morado. All-in sustaining costs around $1,500 total, and revenue in excess of $100 million this year. As mentioned, we see a path at both assets to potentially double production for next year. We'll jump right in at Campo Morado. Campo Morado is a VMS-style deposit. It was discovered by the Hunter Dickinson Group in the late 90s. It was brought into production throughout the 2000s, and then it was sold for $410 million in 2011 to a group called Nearstar. Nearstar at that time was putting together a zinc-focused conglomerate. They had 5 zinc mines around North and Central America. Ultimately, Nearstar ended up bankrupt by 2017, and we acquired these assets in 2019 out of bankruptcy by assuming the debt that this company had to Trafigura. The processing capacity is about 2,400 tons per day. As mentioned, we're only able to mine at a rate of about 1,400 to 1,600 tons per day, so we're not entirely filling the mill. However, as mentioned, last week we signed an agreement with Cominvi, which is, in our view, the best mining contractor in Mexico. They mine for Silvercrest, they mine for Agnico Eagle, they mine for Pan Am Silver, and now they're mining for us. So we expect a straight line ramp up between now and the end of the year, whereby we should be able to consistently fill the mill at a rate of 2,000 to 2,400 tons per day. That should enable us, coupled with improvements at our mill, to produce between 60 and 80,000 ounces of gold equivalent next year. We have a resource of about 16 million tons of M&I, grades about 4% zinc, 0.8% copper, almost 1% lead, about 120 grams silver, and about 1.7 grams per ton gold. So truly a polymetallic deposit. We think that gives us a rock that's worth about $125 to $140 per ton, and our mining costs, milling costs, administrative costs, and transport costs sum to about $90. So we see about $30 to $40 in pure margin for every ton that we mine. Said another way, we think that we can generate between 60 and 80,000 US dollars per day in operating margin from this mine. We're going to dig in a little bit more to how we're going to do that. Like I said, one of the primary projects that we've had ongoing this year, and frankly, what gave me the all clear to get involved with this story, was some of the improvements that have been made at the mill, which allow us to meaningfully improve our copper recovery. And along with copper, some of the other metals that come along with it. Chris is going to walk you through what we've seen at the Campo Morado improvement project, which gives us confidence that we're going to be able to consistently recover in a range that allows us to be meaningfully profitable. Chris, go ahead.
Good morning, everybody. So late last year, between Q3 and Q4, we engaged with Ausenco to help us optimize the milling operations at Campo Morado. One of the historical issues was the copper recovery. And so with Ausenco, we developed a 3-stage program to implement this year. The first stage is called Back to Basics, which is already implemented and ongoing. We brought Ausenco in Q4 last year, which you can see on the graphs. On the left, the green colored bars are the results prior to the optimization program, and the purple bars on the right are after the program was implemented. And just by using Ausenco's expertise and helping us optimize milling operations without any significant investments, we're able to significantly improve copper recoveries from the 40% to greater than 70%. And that, as demonstrated by the graph, we've been able to maintain. The second stage is sustainable operations, and there we're just focused on stabilizing the operations, ensuring that we can continually meet these new recovery targets, and we've been able to do that over several quarters now. The third stage is going to be implemented before the end of the year. The main focus there is to produce 3 saleable concentrates. So currently we are selling a zinc concentrate and a bulk copper lead concentrate. The final goal before the end of the year will be to have a zinc, copper, and lead concentrate, which ultimately will improve our revenue per ton milled, as will improve the payabilities on our concentrate production. There is a stage 4. There are further improvements that we think that we can implement in further stages coming in the years to come, but definitely more improvements at Campo Morado, and we're pretty excited to continue on.
Based on the 2 major improvements that we have underway at Campo Morado, meaningful improvement to throughput based on improved mining rates as a consequence of hiring Cominvi, plus meaningful improvements to recoveries of both of all of silver, primarily copper, gold, and also lead through improvements at the mill, should enable us to produce in excess of 70,000 ounces of gold equivalent just from Campo Morado. Upon completion of these and building on the throughput that we intend to achieve in 2025, we expect to have meaningful cash flow, which will enable us to do the first exploration program in over a decade at Campo Morado. Chris will walk you through a little bit quickly on what that exploration is expected to look like.
So I think the main focus here at Campo Morado is the amount of technical information that we have available to us. There is a wealth of geotechnical information that has been accumulated over the years, especially in the late 90s and early 2000s. And we have reviewed that technical data, and we understand how the first major deposits that were discovered at Campo Morado, how they were found, processes used by the Farallon company, and we think we have a good handle on the geology to understand how we can further increase the resource here at Campo Morado. So on the left, you just have an overview of the mining concession. We are basically currently mining in the very center. There's a little blue shape in the center that is the current mine area, and the mining concessions available to us are mainly to the northwest and to the south. On the right, you just have an isometric view of the current mine workings and the resource ore bodies that we that we have modeled. So we have a lot of underground infrastructure in place. We know these ore bodies very well. Go to the next slide, please, Sophia. So on the right, we're just trying to show the wealth of the technical information that's available to us here at Campo Morado. And we've used that information to develop multiple exploration targets very near within a 5-kilometer radius of the mill and mine infrastructure. We have over 3 dozen targets. We've ranked them based on their geological potential. And we obviously have a top 10 targets based on their potential. And of those top 10, we think that 4 of them will be ready to be drilled in the very near future. So we're very excited. This is a tremendous upside. And as Dan just mentioned, over 10 years without any drilling done. So we are confident that there is more resource here to add in Campo Morado.
So that's the story at Campo Morado. As we're starting to build on a theme, it's really about optimization current operations. It's building cash flow and then investing that cash flow in exploration with the expectation that we will be in a situation to potentially expand this mine over the course of the next few years. I see a question from the audience asking that is pertinent at this moment about Campo Morado's security situation. Look, I have been to dozens of different mines in Mexico over the course of my career. The situation at Campo Morado is not significantly different from any of these other mines. You have to be aware of your surroundings. You have to be aware of your place in the community. We have had, since this company and predecessor owners have owned this asset, we have had no meaningful security issues. That's not to say that it's not possible that they could come about. However, we have teams of people working on security, working on community relations, working on things that ensure the safety of our employees, the safety of the concentrate that we produce, and so on and so forth. I mean, it's Mexico, so we are aware, but obviously Torex is about 50 kilometers from us. They have had security issues, but they haven't had any particularly recently. Equinox operates Los Filos mine not far from us. Again, they have had security issues, but none in the recent past. So like anywhere in Mexico, we're aware that there are security issues that need to be dealt with. We've been fortunate, and it's not just good luck, it's also good planning. We've been fortunate and diligent not to have any meaningful security issues since this company has owned this mine. We'll jump now into Tahuehueto. As mentioned, I happen to be on site here. It's my first visit since taking over as CEO. Very remote mine. It's in northwest Durango State. As mentioned, we flew in from Culiacan this morning. It was about a 30-minute small Cessna flight. We have an airstrip about 20 minutes from the mine. I'm going to do my first trip underground here in about, frankly, as soon as we get this finished. So Tahuehueto is a brand new mine. It's about a 750,000 ounce gold equivalent resource, with about 2/3 of that being gold. About $100 million US has been invested into this asset over the course of the last 10 years or so. Right now, we are in the process of ramping up from 400 to 500 tons per day 2 months ago. We've recently been able to produce between 700,000 and 800,000 tons per day on an average basis. And we see a ramp up between now and year end to in excess of 1,000 tons per day. At 1,000 tons per day, we would expect to be able to produce 30 to 40,000 ounces of gold equivalent resource. Again, it costs in the $1,500 to $1,600 range. So at current prices, it's about 30% margins. And we'd be in a position to expect $10 to $20 million in operating cash flow from Tahuehueto. With that operating cash flow, we would expect to invest in exploration. The exploration potential here is, in my mind, it's really off the charts. If I had been in a position 10 years ago, when the decision to put this mine into production was made, I would have said, hey guys, listen, let's go and really do this asset justice with the drill bit. That wasn't what was undertaken. So now we've got an operating mine expected to produce meaningful cash flow in 2025. And we will be in a position to self-fund a very aggressive drill program over the course of the back half of 2024 and into 2025. Here's a schematic of the mine. You can see it's fairly steep, but it is gravity does work in our favor here. It's an operating mine and it's brand new. Chris will jump in here, tell you a little bit about what we're doing at the mine, and he can talk to you a little bit about the exploration potential, which will be our focus in 2025.
Yeah. So in Tahuehueto, we're currently mining sulfide ore. So we're producing, again, 2 concentrates, a zinc and a lead concentrate, with the majority of the precious metals reporting to the lead concentrate. On the left side of this slide, you will see a long section of one of the largest vein structures that we're mining. The white shapes represent the outline of the reserve ore bodies. And I think the main thing here is we're currently mining. The exploration that has been done, again, it's been over 10 years since the last drill hole was drilled. A lot of that exploration, or all of that exploration, was done from the surface, from around outcropping vein structures, and very relatively easy to access. We currently now have underground infrastructure, underground ramps, portals, declines, as well as the camp. The main vein structures are open at depth and along strike. So for us, a very straightforward exploration strategy is to test the continuity at depth, as well as the continuity along strike. Some of these reserve areas we think are the same vein. As you can see in the center part of that slide, we have an undrilled, what we're calling a highly prospective gap. Those 2 areas on the left and the right are on pretty much the same strike. We think they could be the same vein, and so it's a very straightforward process to start stepping out and testing that continuity along strike. Right now, depending on how we define those, we have about 4 veins. We have 4 veins in resource and reserve, but we have over a dozen veins identified on surface within the property, within our concessions, that have yet to be explored. So in addition to the potential at depth and along strike of our current veins, we've got more than a dozen yet to fully explore systematically. So we have a very high expectation that there will be more resource to discover here at Tahuehueto. We compare it, if you look on the right side of the slide, to the San Dimas trend, the San Dimas district, which is on the same trend as us. The photo there is courtesy of First Majestic. That's the Tahuehueto mine area, which is similar in size to our concession area. And so with similar geology, similar mineralization, on the same trend, we think that the potential for Tahuehueto is very significant. And again, we have a plan to start drilling in the very near future here at Tahuehueto.
So that's an overview of the assets that we have in this company. These are really the assets that attracted me here. I see an opportunity to grow the current production by double without meaningful investment, and generate meaningful cash flow that should enable us to clean up our balance sheet, to invest in exploration, study expansion potential at each asset, and ultimately, if you fast forward 12 months, to be a completely different company than the one that you see today. I've seen a couple of questions in the chat about our balance sheet, so I'll give the corporate overview here now. You can see that this company has virtually no institutional following. We have no research coverage. We have no institutional investors. It's closely held, with almost half of the company being held by insiders and close associates, with a public float less than half sitting mainly in retail, largely around Vancouver. You can see that the share price has performed fairly well over the course of the last 6 months. We're more than double that where we were 6 months ago. And that's really a consequence of some of these improvements, particularly the Campo Morado improvement project, which has allowed us to take a mine that was struggling to break even to actually start to generate meaningful cash flow, particularly from the copper concentrate. We expect those trends to continue. As far as the capital structure, we've got 170 million shares outstanding. We've got a fairly large warrant position coming due over the course of the next 12 months, with the vast majority of that in April of 25. Between April and June of 2025 and now, you can see there's about 47 million warrants at 50 cents. Those would generate approximately $23 million in incremental cash to execute on some of these capital improvement and exploration plans that we have over the course of the next 10 months. We do have a fairly modest cash position, $2.8 million. We have started to see some warrants come in as our share price continues to be well above 50 cents. Particularly some friendly investors have been willing to exercise the warrants. We are generating modest cash flow at both assets, which is giving us a little bit of breathing room. And then we also have some other levers to pull to generate cash. We do have a fairly meaningful debt position, $25 million, of which $8 million is convertible. It's all to Trafigura. $8 million is convertible at 35 cents. We have had some conversations, but we're not in any rush to convert that. The balance is $16.5 million, also to Trafigura. We start repaying that in October of 2024, so a few months from now. And we will do that in quarterly increments over the following 2 years. So that's really the overview of the balance sheet. I've seen a couple of questions in there. So to answer the question about a capital raise, we're not currently contemplating a capital raise, but we will be opportunistic. We see the opportunity to advance more quickly some of these capital improvement opportunities that we have. We can get to full production faster. We can get a more aggressive drill campaign going faster, and we can really boost the recoveries at the mill. All of those are fairly modest, but they do add up, particularly when you're only sitting on $2.8 million. Moving lastly to the people involved, and then I'll get to some of these other questions I see on the right-hand side. Really, the thing that I am most excited about with this company is the exploration potential, and leading that, and not on a hands-on basis, but really as a director, is Dr. Neil O'Brien. He was the first VPX for Lundin Mining. He was involved from the very outset. He was integral in the growth of Lundin Mining, particularly as they brought in Neves Corvo, which is a VMS deposit in Portugal that was acquired in 2004 by Lundin Mining. It really became a cornerstone asset. He sees a lot of the same potential from Neves Corvo that we see at Campo Morado, and he's been a real cheerleader in the potential that we have here. In addition, we've got Phil Brummett, another former Lundin guy. He was the mine GM at Candelaria Mine, which is a big underground and open pit copper mine in Chile, another cornerstone asset from the Lundin Mining. We also have two Mexican nationals, Ruben and Roberto, who help us navigate the political situation in Mexico. David Rhodes, many of you may know, is one of the founders of Endeavour Financial, very accomplished mining financier. Peter Demooney, another London-based guy, another mining financier, has introduced several of the high net worth guys into this story. And then Rory Godinho is a securities lawyer. The balance of the team, myself, as mentioned, I had a 20-year investment banking career prior to joining. I really feel like I have a very good sense of what the ingredients required to make a good emerging mining company, and I see them all here, and we are in process of ramping those up to kind of live up to the potential of these assets. Ramon is our president. He really serves as also as country manager. He's the liaison between what happens in Mexico and what happens in head office. Chris Richings, our VP Technical, who you've heard from here today. He also spent 14 years at Lundin Mining. We have a strong Lundin Mining thread running through this company, which I think is a major advantage for us. Most recently, he worked under Phil at Candelaria. Armando Alexandri, he's here with me today at Tahuehueto, longtime Mexican mining industry veteran, has an encyclopedic knowledge of pretty much every asset under the sun here in Mexico, so very helpful. And then Lisa and Israel form our finance team. So that's the presentation. That's the opportunity. Fast forward from today, 12 months, we see a near-term valuation re-rating as we ramp these assets up. We intend to focus on paying down debt. We intend to focus on exploration in a very aggressive way. And then that longer-term growth, we have a target from these assets of 200,000 ounces gold equivalent. And then we also have an opportunity to look at M&A once the ship is stabilized here and we're generating cash flow that we expect to. So I see a few questions on the right-hand side of the page. Chris, do you see those also?
Yes.
Why don't we just do them in order here? Well, I see at the bottom here this question from Per Esson. What do you see as the long-term production capabilities of both assets? Initially, we see that, for 2025, we see somewhere between 35 and 40,000 ounces of Tahuehueto potential. That's as it ramps up. I don't see any impediments to really being able to push that beyond that. We had a conversation over dinner last night that without any meaningful capital improvements, we think that Tahuehueto is capable of doing up to 50,000 ounces of production just from the current infrastructure with a couple of, with some modest investment in the plant. At Campo Morado, we think that it has potential to produce 80,000 ounces gold equivalent just from the current infrastructure as it sits. So between those two assets, I don't have to squint very hard to imagine that we could produce 130 to 140,000 ounces just from the assets as they sit without meaningful capital investment. Beyond that 200,000 ounce goal, that would require probably an expansion at the mill at Tahuehueto and would also require an expansion at the mill at Campo Morado. So we would get into more meaningful capital investment in the tens of millions of dollars as opposed to the low single digits. See a question here around G&A. We think that the G&A is fairly modest. The only new hire that we expect to make, other than myself, and this is from Jay Shapiro, only change to the G&A is really the hiring of myself. I would like to, with all of the focus that we have on exploration, I intend to hire a VP Exploration, to help with that. But those are the only changes to the work structure. I don't expect, including myself and others, I don't expect G&A to go up by more than $500,000 from where it is now. I think that this company has been run extremely lean. We've got 8 people in Vancouver. We have most of our administration out of Mexico City. We've got an 18-person administrative office in Mexico City. So right there, we run a fair bit leaner than a peer who has all of their staff in Vancouver. Like I said, I don't think that the G&A at this company relative to a number of our peers is in any way substantial. Do you want to open it up, Magda, to questions?
Sure. So I see another one here about refinery charges and how they kind of have increased recently. Have they become better? How Does Trafigura accommodate with the new copper con and give them and the values on the precious metals generated?
Chris, do you want to answer the question about the refinery
Yeah.
charges? My impression is that they've been falling, actually.
Yeah, we did see an improvement, especially in the zinc refinery charges this year. I think overall, Campo Morado, for example, with incremental improvements in copper recovery, we're going to see incremental improvements in precious metal recovery. And so obviously the payability will improve as we incrementally improve both the quality of the concentrates. That's the short term. Long term, I think there's more strategic discussions to have with Trafigura on our agreements. But short term, incremental improvements will improve payability.
And one of the opportunities that we see with Trafigura, obviously, when you owe them $25 million, you're not in the best position to negotiate. Once we have made a meaningful dent in the debt that we owe them, there are some expansion opportunities that we see, as well as some new concentrate opportunities that we see that would enable us to actually sell metal outside of Trafigura. And so we would be in a position to maybe negotiate with them better agreements as they pick up some of these other concentrates, as they pick up some metal that is not pledged to them under the current offtake agreements.
Okay, got it. And I see one question here about debt. You have been pushing out debt. Go ahead.
I saw that question just come up. So it says you've been put. Can everybody see the questions that are written, or should I read them out?
I believe the audience can see them. Yeah.
Okay. So there's just a question on debt. Obviously, we have been pushing the debt out. That's come at a bit of a cost with now we have pretty much all of our metal pledged for the life of mine, current production and current concentrates pledged to Trafigura. However, we think it's more than realistic, frankly. If I walk through my expectations on cash flow generation for 2025, if I contemplate the $25 million that we expect from warrant exercise, I think that if you fast forward this company from today to where it is in 12 months, between cash flow generation potential, between warrant exercise, I see a scenario where we would have more than $40 million on our balance sheet, more than enough to pay down our Trafigura debt and be debt-free and invest in exploration. Am I saying that am I making a pledge here now that we'll be fully paid off? No, but I guarantee you we have made a very significant dent in our debt over the course of the next 12 months. And I mean, this is for the audience to figure out, but my expectation is that a company with 100,000 ounces of production, aggressive drilling, modest debt position should trade with a market cap well in excess of 100 million Canadian dollars.
Thank you. And there's another question here about the miners, how they deal with challenges brought on by politics being viewed as less favorable to mining in Mexico.
Look, we think now
is a good other mining.
Yeah, we think now is actually a good time to be buying low on Mexico. Obviously, the AMLO government was not particularly favorable to mining, became substantially more difficult to get permits. Open pit mining, I wouldn't want to be trying to permit an open pit at this moment. With that said, mining is integral to the Mexican economy. We think that, look, we have all of our permits, so this isn't an issue that we necessarily have to deal with. But we operate with the support of the local regions. We operate with the support of the politicians. As I said, we think now is an excellent time to be being more aggressive because we think that things are poised to turn around under the Sheinbaum government, and things will get better, not worse, than they were under AMLO.
Okay, got it. And at Campo Morado, like you discussed some near mine targets. How could these be brought online? Would you be able to develop from underground? Would these be like more standalone? the
Chris,
priority?
the
talk a little bit more about our philosophy around drilling.
Yeah, so part of the ranking that we did on those exploration targets, one of the factors is the proximity to current underground workings, proximity to the mill, the ramp, et cetera. So we're not focused right now on targets that are far afield that would require significant development requirements. We're focusing on near mine targets that would be relatively easy to bring online. Obviously, we have to balance that with something that's going to return on the investment of exploration dollars, but that's all in the evaluations that we do of these different targets.
Okay, thank you. And can you remind us how much you're drilling at both sites?
The plan is 5,000 meters at each site this year, and then depending on results and a few other factors there, we'll see what we do with the exploration programs.
We expect the drilling to really be evergreen, by which I mean there is so much potential here at each site. We owe it to shareholders to really get out and discover what is available. Both assets have been neglected from an exploration standpoint for literally decades, and we think that the potential and our philosophy is going to be drilling to extend and expand the mine life of each asset as they are now. We're not going to be further afield looking for high grade. There's so much potential near site. We want to be able to extend and expand both mine lives, and really that's the philosophy. It's drilling to demonstrate the potential to grow near-term cash flow.
Thank you. And we got a question on recoveries. Are there still medium-term plans to work on recoveries at Campo? There was talk in the past that finer grind, pneumatic grinding could bring recoveries to 80 plus.
Yeah, so there are part of the copper lead separation will bring a finer grind into we're modifying the flow sheet to grind finer to successfully separate the copper and the lead and produce those two separate concentrates. In terms of medium-term plans to improve gold and silver, that's part of the stage 4, what we're calling Campo Morado 4.0, kind of tongue-in-cheek. That will be upcoming. Those are objectives to improve precious metal recoveries, and there are different ways we can do that, and those will be under evaluation here in the near future. And like I said, there definitely are opportunities that we expect to capture in the medium and longer term.
Got it. Thank you. And I feel like we are getting to the end of the questions. Can you just give us an overview of the major news items and catalysts to look for from the company over the rest of the year?
Yeah, so really it's going to be confirmation of the things that we've outlined on this call. It's going to be the ramp up at Tahuehueto and Campo Morado, and you'll be able to see basically from the quarterly results. I would imagine that when we start to see consistent filling of capacity of the mill at Campo Morado, we would be inclined to press release that. We will be commissioning. So there's a difference between completion of construction and commissioning the mine at Tahuehueto. So we would likely to press release that. Once we see that we're consistently producing in excess of 1,000 tons per day from that operation. Drill results, obviously, we've announced that we're kicking off a drill campaign at each site. We're very excited about the potential for those and would obviously be inclined to release that news. Quarterly news, but really it's just demonstrating what we've talked about on this call, that the optimization of both assets is underway. That the mining contractor is working with the other folks at the site, and we're consistently producing or mining and milling to nameplate capacity at both sites, and then exploration. And then there will be some balance sheet things too that we might be inclined to press release as we commence paying down debt, as we stabilize the balance sheet, et cetera, et cetera.
All right, and we've just had another question come in. Congratulations on completing a nameplate at capacity at Tahuehueto. It would be great if you can give color on the copper, silver grades if you move to new ore bodies.
Yeah, I'm not sure if I understand that question fully. As I said, we're currently mining.
I think it's fair to say that the drilling that we're aiming for is going to be consistent with the resource grade that we currently have. If anything, we will be targeting areas where we hope and we expect that we might find higher grade nearby to the existing infrastructure that we have. So it's going to really be based on proximity to infrastructure, and we're going to be drilling for mineability. And I think that that's absolutely critically important, that we drill for mineability, not for the market, but to extend mine life, to drill stuff that is close enough to the existing mine infrastructure that we can add it immediately to the mine life.
Got it. Thank you. And was there anything either one of you wanted to touch on today we didn't get to discuss?
No, I think that's a pretty good overview of the story. I mean, other than the fact that I traded in my prior career to devote my time full-time to this opportunity, I think that says a whole lot about how excited I am personally about the opportunity here and the potential that these assets have within the context of their current valuation.
All right. Well, thank you, Dan. Thank you, Chris. Thank you to the audience for submitting all their questions. If anybody has any questions we didn't get to, please reach out to Deborah or myself. And with that, thank you to everyone. Have a great afternoon. Bye.
Thanks, Magda.
Bye.
All right.
Bye.